Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, April 12th, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index resuming its decline of minus 0.9% last week as it continues to signal bearish on a 90-day trend duration. On the other side of the down dollar, it did have the euro versus the US dollar pop 1.2% off of trend support last week as it continues to signal bullish on a 90-day trend duration. You had the Japanese yen in turn bounce as well off its immediate term oversold signal of plus 1.0% last week as it continues to signal bearish on a 90-day trend duration. And then you had the British pound versus the US dollar correcting minus 0.6% last week as it continues to signal bullish on a 90-day trend duration as well. And so on the back of this down dollar, you did have commodities, specific commodities continue their inflation higher with the exception of oil, which did correct last week. However, what's interesting to note is that in the midst of its consolidation, you have oil volatility continue to subside as it broke down below 40. If you take a look at OVX oil, the volatility, so that is continues to be bullish for the price. You take a look at other sectors which did inflate in kind. You take a look at copper, that inflated another 1.2% last week to now plus 9.8% the last 3 months as it continues to signal bullish on a 90-day trend duration. If you touch on something in the agricultural sector, in corn, that continued its inflation higher, another 3.1% last week to now plus 16.0% the last 3 months alone. And then if you take a look at something like lumber, that inflated another 11.2% last week to now plus 82.7% in the last 3 months alone. Which now brings us to rates. You did have the U.S. 10-year Treasury bond correct minus 6 basis points last week to now plus 54 basis points in the last 3 months. And on the other side of that, you do have gold, which continues to be an absolute dog, now down minus 17.6% from its cycle peak back in August. Just touching on global equities, you did have the Shanghai Comp down another 1.0% last week to now minus 3.3% in the last 3 months as it continues to signal bearish on a 90-day trend duration. That's in comparison to something like the SPY, which were up 2.7% last week. As you have consensus continue to remain short. If you look at the CFTC positioning report, just in terms of the broader equity indices, so you want to continue to fade that as you and be more data driven as opposed to anchoring on narratives as you come into these easing comps. Just taking a look at, for example, the PPI number just last Friday, you had headline PPI accelerate 140 basis points, which would be the fastest pace of price inflation since 2011. And that's coming into this week where you have CPI on Tuesday and then retail sales on Thursday. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.